Hello everyone, welcome back to Just Invest Today. In today's video, I'm going to talk about how to invest in 2024 the Mohnish Pabrai way. He gave us so many damn videos last year about his strategy and how to invest. He calls it anomaly-based investing. This is the strategy that he's using for 2024 in my opinion because he's been talking about it so much. So I'm going to explain what he means by this anomaly-based investing in this video. Before we get into this video, guys, can you like this video and subscribe to my channel today? I'm providing you guys with so much new content. So click that like button, click that subscribe button right now. So Mohnish Pabrai is a well-known value investor in the value investing community. He gives you a lot of advice on just how to invest and what to do in the stock market. In his recent couple of videos, he's just been talking to a lot of universities and answering questions. And what I took from a lot of it is that he has this anomaly-based investing strategy that he talks about a lot. And I'm going to give you a few examples of these anomaly-based investments that Warren Buffett has made, or even himself has made. Some of those investments in like Reysas already have 5x. He still thinks that Reysas is undervalued at this point. Let's talk about one of the anomalies that he talks about in his videos. Anomaly-based investing is all about weird things happening that make no sense, where there's a tremendous amount of upside and there's not a lot of downside risk. So he can potentially see a double, a triple, even a quadruple in the stock price eventually, because the value and the price just make no sense in the market. He gives one example of Warren Buffett buying PetroChina in 2005, him making a $400 million investment in PetroChina. And this is basically an oil company. And if oil prices kind of remain the same, it would be an amazing investment, because PetroChina during that time was making $12 billion a year, and it was selling at a $35 billion market cap, which made no sense to him. 45% of the cash flow was going to be distributed as dividends, selling at 3 times earnings. So you would literally get your money back in 3 years. So why wouldn't you make this investment and see where the market cap will be priced in 3 years? You're going to have all your money back in cash. So that's what Warren Buffett did. And the stock actually tripled from where it was. So that was just an anomaly. Like, why is it selling for that cheap? And it was state-owned, government-backed owned, which basically means that it's not going anywhere. It's going to be a stable company into the future. Warren Buffett saw this as an easy bet. So that was one quick example of anomaly-based investment. He gives another example of actually buying Reysas back in 2019. So Reysas is a warehouse operator in Turkey. Reysas had a lot of established clients already, so he wasn't worried about the operation going bad or whatever is happening with the operation. He saw the management was stable. Like, he didn't know if it was a fraud or whatever because it was selling for so cheap. The market cap was only at 16 million, but if you liquidated all the assets, all the warehouses, you would make around $800 million. So he's like, why is the liquidation value at 2%? This is an anomaly. So like, what's happening with this company? So he actually ended up making this investment because there was no downside risk. If they wanted to sell the whole company, they would get at least $800 million. The business was selling at $60 million in the market. So like, what was happening? So he made this bet. I think this Reysas bet already like 5x for him. So he made a killing in this prediction of getting into Reysas. And a lot of people were scared of Reysas because it was in Turkey and they have crazy high inflation. People were leaving the market. They were scared of what was happening in Turkey. But he didn't see a lot of downside risk because they were making a lot of money in euros or in USD because they had clients like Amazon in the warehouse operators. So he didn't see a lot of downside. So the downside was very minimum for him and the upside was huge. That's what anomaly-based investment is all about. The last example that he gives us is about a company called IPCO in Canada. He bought it back in 2004. It was a steel producer. They had actually signed long-term contracts for 2 years plus, getting $15 for those each 2 years. Plus, it already had $15 on the balance sheet. So that would be $45 in total. It was selling for $42. He saw that as like, damn, like just in 2 years, I'd have all my money in cash just from owning this company. So like, it didn't make any sense why it was selling for only $42. If it guaranteed it would have $45 in cash. So what he did was just buy the company and see what would happen in 2 years. So in 2 years, they actually were able to sign a longer contract and the stock just literally shot up to like $80, $90. And then that went up higher and then another company bought it out. So this was all based on anomalies. Like, why is this company selling so cheap? But when you see these really strong bets to make, you gotta like make these bets because they're anomalies and they don't come a lot. When you see these anomalies, you have to make these bets. And that's what he's been talking about in the past few videos about buying into anomalies. And literally, you're just gonna have to wait and see what comes up because these are not gonna come up very often, maybe once or twice a year. So while you're doing that and just waiting around for these anomalies to come and you're just searching around, you might be buying other stocks that are only going to generate you 12, 13%. But when you find the anomalies that are going to double, triple in 2 to 3 years, like those are the plays that you really want. That's how you generate crazy returns in the market. And this is what Warren Buffett talks about, how he would buy these companies that don't make sense in the market, that are selling for like 3 or 4 PE, that are going to generate that much income in the coming years. So this is a very good strategy to use, or at least to think about having your repertoire. So what do you guys think about this anomaly-based investment that Mohnish Pabrai has been talking about in his last couple of videos? Guys, like this video and subscribe to my channel. Peace.